Very simple structure narrative. And you can see the storyline behind it. It's a trading flow chart, basically decision tree for making simple market hypothesis. And am I bullish in terms of real value? Am I bearish in terms of real value? Is the structure bullish? Yes or no? Is the structure bearish? Yes or no? So a bullish structure, a bearish structure, bullish structure, a bearish structure. So if you're bullish and you've got a bullish structure, then of course that takes you to this momentum trade here. Aggressive, buy early, momentum trade setup. If the structure is bullish but you've got a red candle, then of course get ready to move towards absorption. So you're trading limits on the way down, limits inside the higher structure, limit order buys on the way down, and get ready to move towards any absorption prints so you can flip very quickly. If you're bullish, but you're at a bottom edge, in other words, the market structure is bearish, then of course, if you've got a red candle, that's going to push you to the angle. It's going to push you to the angle. So you're going to be very passive on the angle trading with a measure, which gives us something called a guaranteed premium, perhaps, in that situation. If you're bearish and you get a green candle coming out, sorry, if you're bullish and the structure's bearish, but you get a green candle, this is probably the poorest trade setup. Probably the poorest trade setup you can get, unless you're really tight to a lean, like a Charlie D reversal or a cumulative delta reversal or a Heisman trade entry type process. You do not want to be buying those types of trades from the tipping price area. These types of trades are really poor outcomes for tipping price trading. And unfortunately, if I said to you, which trade would you imagine most retail traders do? You can almost guarantee which one most retail traders do. Now, it wouldn't be a surprise. It wouldn't be a surprise about what trade most traders do. So most traders will do a trade, for example, in this. And where would most retail traders take a shot at this chart here? Well, they would look at it, and for argument's sake, we've got bearish structure, they would start selling here. They'd say that we've got a bearish structure, they'd start selling here. They'd say we've got bearish structure, they would start selling here. And obviously that leads to a loss, and this might lead to a loss as well. So that is a sell in a bullish structure. Sell in a bullish structure. So if you're selling in a bullish structure because you're bearish, that would be your sell. That would be your sell. That would be your sell. It's a passive on the angle sell. And that's how you would be able to save yourself and save your account from a washout if you were trying to sell into a bullish structure. And that's obviously advised on this narrative here. If your structure is bullish and you're bearish, then of course the idea of this green candle is passive, and the worst trade you can do is the red candle selling, unless it's a strong Heisman or a CDR. Just simple execution, guys. That's all it is. Simple execution. How to execute properly based on structure. Now, obviously, there's additional things we can use. We can use order flow to find leans. We can use voltics to find executions as well, but there's not always going to be a voltic on a candle. There's always going to be order flow. So you start watching, you start getting ready, and you take your shot. Target was achieved on gold. Well done, guys. Target was finally achieved. What price did we give you for a target on gold? 31s, 32s. Target was achieved on gold, guys. 31s, 32s. Well done, everybody that decided to sell at 49s. Nearly $2,000 profit. Thank you very much. And thanks for the memories, guys. See you on the next rotation. It's been a pleasure.